Hi and welcome to the Market Alert for Thursday the 29th of July 2021. So Fed leaves the rates and QE pace unchanged, just like they have on many occasions before. Says has made progress towards goals. That goal is to destroy the US completely and to destroy the US dollar. The full statement from July FOMC meeting, some interesting notes here. The Fed is committed to using its full range of tools. How many times have we heard that? It's nauseating. The economy in this challenging time, thereby promoting its maximum employment and price stability goals. And then, as it says down here, the progress on vaccinations and strong policy support, there you go, policy again. Indicators of economic activity and employment have continued to strengthen. No, people have come off their furlough, that's what that is, gone back to their jobs. The sectors most adversely affected by the pandemic have shown improvement but have not fully recovered. Inflation has risen, yes, and it's probably not transitory either. Again, basically what they're doing is using the excuse, or using it as an excuse, those that have been on furlough now actually back in employment, as a way of saying that their policies are working. According to Zero Hedge, this is a very good article that goes into more detail. If you just put in 5 takeaways from Powell's conference, Zero Hedge, in Google, you'll be able to find it. The subhead states here, this was one of the most confusing Fed press conferences that have ever happened, and that's because they haven't got a bloody clue. That's why. Simple as that. It's the classic mushroom theory. Feed people BS, keep them in the dark, feed them BS, and keep them happy. That's what it's all about. Well, the implied volatility has a different opinion, because this has gone up to 14.98 from 13.24 the day before. If you really want to know what the risk is in the market, look at the implied volatility. This is always factored in by the option sellers. They're the ones who understand life on the coalface, as it were. When you're selling options, you've got to know how much risk to actually calculate into it. Meanwhile, news today, 1:30, we've got advanced GDP. This is forecast to be significantly higher. May give the Dow the opportunity to move through the recent high if it comes out at the forecast and higher. We've then got the usual claims, weekly claims. The market's not reacting too much to these now. 18 months ago, when we had the 10 million to start with, that really shook the market up, but this is becoming a bit of a non-event now. And then we've got pending home sales as well. You can see how this has been marked down because house sales have dropped off a cliff in the US during the last few weeks. So let's have a look at the Dow. We can see that yesterday we've got more selling. We had the same on Tuesday as well, but the market finding support overnight at yesterday's and Monday's low, not breaching this at the moment. Prices will need to stay above the low of these 2 days, Monday and Tuesday, in order to move to the upside. Also, a close above the 5 bar would be welcome as well. Also, from this high to this low, there is going to be resistance at 89, and 89 is going to be sort of in this area anyway. I'm not going to draw it on the chart, but where the arrow is, yesterday's high is sort of the 89%, which is why the market's not breached it. A very interesting area, and one that you'll need to take note of. In fact, I will draw this in. I'm going to just double click on the top of this bar for Friday, or is that Monday, Tuesday, Wednesday, Monday's bar. So let me just remove these and just leave you the 89 in there, and that's the area. As I say, it was the right sort of area, but that's the figure. If the market rallies up to this area, fails, it then starts to move to the downside. So a very important area. Make a note and keep a note of this one here. In the 30-minute chart for the Dow yesterday, in the pre-market, the pajama traders moving the market down to the 200 MA, and then we kicked off at 230 with 230s here, that bar there. So in the morning, overnight, they moved the market down. The pajama traders came in, moved the market up.
as they have done. There's a pattern. You can see them bringing it back to 89% of Tuesday's bar. Then the Dow opened and the market was pressured to the downside, continued to move to the downside after a bit of consolidation there. Powell speaks, the market comes up, the market doesn't believe him, and then makes its way back down to yesterday's low on the overnight, which the market has bounced off at the moment. In the German DAX, we can see that prices also sideways. We've got an inside bar for yesterday. We've got these fibs to the upside drawn from here to here. Again, watch the 89. If prices do manage to trade up to here today, then tomorrow they would need to take these out. If not, we're likely to see the market move low. We've got this many times before in the charts in the longer term. So it's important that prices move through this area. Now, on the bigger picture, of course, the 89 is going to be sitting in this sort of area to the all-time high that was made a few weeks ago. In the 30-minute chart, just a quick step back and have a look. You can see how quiet it was yesterday. Really choppy for yesterday. Then into the evening, the market, the DAX coming back down to the DP level on Powell's announcement, but then drifting lower, the same as the Dow. You can see yesterday's low is here. We've got the market just trying to break through the DP at the moment, and then we've got upside targets, which you can see there with previous day's high in here, and then through to the R1, etc., to the upside. What have we got? Oh, that's the US claims. I thought there was another news item. In the 2-minute chart, just to have a quick look overnight, you will see that prices gapped lower, came back, filled the gap. We can see from there back to there is around 89% through the DP, heading towards that low, but managing to find support before hitting the BRN. Prices moving to the DP level and just holding above this at the moment and above the 200. So the potential when the futures open is to move to the upside at this time. Meanwhile, in the metals markets, let's have a look. We'll start off with the dollar as it's up. This is actually starting to move to the downside, 62% retracement from here to here. I'm surprised they're allowing it to go down, but given that Powell did nothing with interest rates, never even hinted about increasing interest rates, because he believes inflation is transitory, the dollar moving to the 62% retracement there. The lower this goes, the happier I will be. The silver market has been allowed to move up. There was some shorts taking profits during yesterday. You can see this from the increase in volume. Prices reversing back above the 78% retracement. Do I believe this will continue to the upside? I don't know, but there was something interesting yesterday in Monaco 64's video about silver, registered and unregistered silver. There was 1 billion ounces being or set up to be registered. Brilliant video, well worth a watch. You've never seen a spike like it in the registered and unallocated chart. So have a look at that. I'll leave a link to that if you're interested. The silver market already up strongly on the overnight, sitting at the 89%. Don't hold your breath. We could get another retracement off this, although the market is due to move back to the upside and reduce that gold-silver ratio as well, bring it back slightly. But certainly given silver a hammering. If you go back to the July low, I think it's this one. What was the date of this? 19th of July. I think actually the one I'm looking at is a bit further back. I think it's going to be this one, 16th of July. If you go to gold, what we got there, 23rd of July was it's all the way back to here. The 29th of June, let me just go back. 29th of June, there you go, it's this low here. You can see how silver's been hammered to the downside over the last month, whereas gold never got anywhere near it, just a 50% retracement from that 29th
low to the recent high, and now moving back to the upside. Just going to remove those fibs at the moment. The market's moving to the upside, so from here to the low of last week, just draw these in. We've got the market going through the 38.50 and just stuck at the 62 at the moment. So an interesting picture there. So yeah, metals moving higher, dollar moving lower. I'm surprised they're allowing it, but you know, at some point, as I've said before, these metals, the banks will turn long, and then it will be a case of hang on to your coattails, because they won't ever go short again. That's for sure. So gives them the opportunity to manipulate the market lower and buy up cheaper prices. We'll see what happens at 1:30. We get the usual picture that we've seen for goodness knows how long, years of manipulating the prices lower. But let's wait and see. So yesterday's trading session, let's see, the market moving higher in the futures, up back to 78%, back through the BRN, back through the 5 bar, 20 bar. 5 bar goes above the 20 bar. Nothing to worry about until it closes back below the 5 bar and the BRN there. Market comes back, sits at the DP in the close, which became significant during this trading session, particularly in the morning. And then the market moving back to the upside there. Before we opened, where we saw weakness coming into the market, prices moved up, tried to take out the resistance to the left. This was hit, prices came back. Held sideways for a bit, but then went down to the BRN, which you'll see in a moment. Tested at this level. Again, you can see all of these retracements as the market comes back up. 62%, and then moves down, takes out the low to the left, and then finds support at the BRN. So it was really quiet. There wasn't a lot going on. We do see a potential buy signal here, but as soon as we get to this level, we can see that this small bar here at the scalp is the same volume as the previous bar, which was also some potential weakness there. And the range is less in this bar, so we can expect a retracement at this point, and the market does. I jump ship, I could see the selling there. The market comes back to the DP, finds support. You can see them bringing it back. The market goes up to the resistance to the left, get the double top, and then we get another retest. More potential weakness coming in. We get a move back to the downside, and here you've got from here to here projected back is 89%. You've got a DP and you've got a 200 MA there. Prices then close back above the 200, back below it, find its feet, and then you can see the 20 bar holding this intact. The 5 bar is above the 20 bar, the 20 bar is above the 200, and then prices manage to move to the upside, back to the resistance to the left there before they run out of steam. And you can see the selling coming in there, increasing volume at the resistance level there, that double top. Prices then sitting sideways, and that's the end of the morning session. I'm just going to fast forward again. You can see how the close, the DP, featured in the mid-morning as well. The market had a shakeout. You see them buying back in with the increase in volume. The market then moving back to the upside, coming back once more, and then becoming really quiet as it waits for the Dow. It gets moved to the upside a bit. We open up, prices trade sideways slow, again back to the close of the previous day. The market is then waiting for the FOMC meeting. It's got the crude oil in the way, and you can see we're just sideways. There's absolutely nothing going on, and this is indicative of the market waiting for the FOMC, and it's not a good time to trade, as will be seen in this trade here as the market comes back. As soon as it's filled, it comes back. It then moves higher, and then we get the crude oil news, and the market just trades in a range, as 20-point range there. Well, not even 20 points. It was just pointless. And then of course we had the news out We'll just drag this back so you can see the DAX reaction to the FOMC. The market down to the DP and close again, and then prices trade sideways and then eventually break to the downside as the Dow move lower. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.